until you make it. So, hi, my name is Quynh. I work at CryptoCompare. We are a market data provider for the crypto industry. And today I want to talk about our main challenges as data providers in this space. And by the way, I gave the exact same presentation 2 weeks ago at the CryptoCompare Summit. So if someone heard it already, then sorry. Yeah. But this time I will be slower. I'm going to show you all the data. I have cool charts, and you can also ask questions at the end. Cool. Oops. What was I about to say? Yes, so I used to trust market data and take it for granted, but working in the crypto space actually taught me that I have to question every single thing. And today I'd like to talk to you about our 3 main challenges. So just to understand where we are coming from and where we are right now, I brought you a chart that shows the exciting boom of crypto coins and data of the last couple of years. What you're going to see is week by week how the space changed. On the x-axis, you're going to see number of exchanges, so you're going to see different coins being plotted and how many exchanges they were listed on. And on the y-axis, the number of trading pairs, like trading to Bitcoin, trading to USD, so you're going to see how many pairs each coins are trading. And you see how the space evolves over the last few years. So let's watch. First Bitcoin, and then altcoins came afterwards. You can see Ethereum popping up with a red dot. 2017, the whole boom of ICO coins, and here we are right now.
Cool.
Yeah. So, as a data provider, what this meant for us is that the amount of data and the complexity just grew exponentially. And here are the 3 main challenges we are facing. And I'm going to talk about one by one how we are tackling them at CryptoCompare. So first problem is data is a mess. Second challenge is data is big and complex. And the third one, maybe the most interesting one and the most current one, is data is fake. Cool, let's start with the first one. So, working in a decentralized industry is super exciting, but decentralized for a data company means that there's a lack of standardization, lack of standards. So what we had to do at CryptoCompare is to start creating naming conventions, start creating standardization of the data set. Just to tell you a few examples, the same crypto coin is trading with totally different names in different exchanges. Sometimes even the same exchange trades Bitcoin under 3 different names. So we had to start standardizing this data set, and what we've done in the last couple of weeks was we open sourced this data set. So if you were a trader and you wanted to trade or do arbitrage across multiple exchanges, you need to know what Bitcoin is called on different exchanges, right? So you can actually use our API now just to match the same coin across different exchanges. And of course, there are a lot of other use cases. Oh, sorry, did you want to take a picture? Okay, so as a data company, we are not only collecting and cleaning, standardizing data, but we are also aggregating it. What you can see on this picture, or chart actually, is every yellow dot is a Bitcoin USD trade. And this chart is from 2015, 1 week worth of data. There were around 300,000 trades throughout this week, actually. And what you can see is that there's kind of a clear line that depicts the Bitcoin price. And there are a few outliers, but for us, we had to take in all this data, all the trades, and calculate a single index price. And back then, our methodologies for aggregation was pretty simple. We knew that where the Bitcoin price lie, and the outliers were very simple to identify as well. Oops. No, wrong direction. Oh yeah. So since 2015, obviously, there are a lot more trading activity, a lot more exchanges popping up. So our data set now actually looks like this. So this is still Bitcoin USD trades, 1 week worth of trading activity. And now on this chart, you can see 1.5 million trades, so 5x trading activity. And so what you can see, or you cannot see, is actually a clear path for Bitcoin. So I had to ask the question, what is the real Bitcoin price? How are we going to calculate an aggregated Bitcoin index? We had to start adjusting our methodologies and start looking at each exchange, each data source, and become more selective about what data we are going to use for aggregation. What we are doing is called the Exchange Review. We are publishing a monthly review of what data sources can come into our aggregation methodology. And we are publishing it to make the process completely transparent. So one of the reasons why the data set grew so much, apart from the growth of the space, is also that data is free. It might sound like a good deal for data consumers that data is free, you can access data for free, but actually, for us, free data means that anyone is free to become a data provider. It means that any exchange with an API that returns some sort of data can enter into this data market and can push any data. And that leads to the next big challenge, which has been the loudest challenge as well. I guess you heard a lot about fake data or fake volumes. Have you heard about it? Or, yeah, recently? Yeah. So probably you heard something like X%, probably like 95% of the total trading volume in this space is fake. So I'd like to take a step back here and really dig into this question, where we are coming from, how did we even get here, and what does fake volume really mean? Cool. So it happened that all crypto data evolves around top lists and rankings. And all these rankings use volume as a metric. And why? Because volume is easy to calculate and very easy to understand. The real problem here is that volume has been used as a proxy for liquidity, and in a lot of times for proxy for quality and popularity as well. So we started seeing very weird exchanges popping up on the top of exchange rankings, and people started to question, is this volume data even real? Is the data even real? Can we trust this data anymore? So what happened next is, well, volume is very complex. It's actually not as easy as you might think. You need to dig deeper. One thing to look at is fee structures. There might be exchanges that reward their liquidity providers. There might be other exchanges that are very expensive, and that's going to affect their volumes as well. Or if you remember, a couple of years ago, Chinese exchanges used to have 0 fee, right? And they used to dominate or have 90% of the back then reported volumes. Another thing to look at is incentive schemes. So this chart shows exchanges plotted in the volume axis and average taker fee axis. The green dots are using trading incentives, things like trading competition, transfer mining, and the red dots don't use them. So you can see that on the very high end of the volume scale, they are all green dots. So those exchanges are clearly using trading incentives to boost their volumes. So you need to look deeper into the volume numbers. But then what happened is that we started seeing a growing demand for better metrics, and people started looking at alternative ways to find bad and good exchanges. One of the projects out there started looking at trading patterns. So what they did was they charted the trade sizes in a histogram, and they found very interesting patterns. And what they claimed was a good exchange should look like this. So what this shows is that an average trader is more likely to trade with lower volumes and less likely to trade with higher volumes with some spikes around full numbers like 1 Bitcoin or 2 Bitcoins. Yeah, and all the other histograms are fairly weird. How can it be that some exchanges trade with such a perfect exponential or whatever distribution? So they say, okay, by looking at trading patterns, trade size histograms, you can identify good and bad exchanges. But guess what? Trading patterns change. This is one of the exchanges that showed anomalous trading behavior, had a weird shape, right? But this is its shape in March, and look what happens until April. So this is everyday trading patterns. And by April, it looks like a good exchange. Yeah. So we found that it's actually very hard to differentiate between good and bad exchanges by looking at trading patterns. But we wanted to look deeper and see why do people want better metrics. And it's because they started losing their trust in the data. And we thought that, okay, CryptoCompare as a data provider, we actually have to try and find a solution for this. We have to bring this trust back. So our question was to ourselves, which exchanges are trustworthy, and which are not? So we started doing a research on each exchange we are collecting data from, and we came up with a benchmark framework that we now shared. We published a methodology, and I'm going to show you roughly how it looks like. Yeah. So what we did was we collected a lot of data from each exchange, and the total scoring basically consists of 7 different components. One thing to note here is that out of the 7 components, we are using 6 that are due diligence components, basically. So we are not using volume directly in our ranking, and our market data tests using trades and order book only consist of 30% of the total scoring. So we look at a lot of things. The geography of the exchange, where it's located, what's the regulatory environment there. We look at the licenses of an exchange, if it's doing KYC or AML. We look at the investment structure and funding of an exchange. That's actually a very good indicator, as probably someone else already did due diligence on the exchange if they are funded by a well-known VC. We look at team and company structure, CEOs, CTOs, their backgrounds, their experience. We did an extensive API test API latencies, rate limits, order books, and trades. And we check if there is a trade surveillance system on the exchange. For the market quality side, we came up with 5 different metrics. And we wanted to avoid volume as is, because we wanted to come up with a ranking without using volume directly. So for market cost of trading, we looked at spread. For liquidity, we look at the order book depth. For price stability, we look at minute volatility. And we created this new metric called the correlation between volume and volatility. Basically, we defined 2 new terms: market maker-driven markets, where the volume actually goes down when price volatility goes up, and investor-driven markets, where price volatility goes up and volume goes up at the same time. Yep. And we also calculate standard deviation of volumes to penalize for trading behaviors like this. Yeah. Okay, so we came up with a top list, and we had scores for each exchange. And I think the main idea here was just coming up with an alternative for volume rankings. And here's a list. The way it looks like is that every component gets a score. We sum them up. An exchange gets a total score, and then it gets a relative ranking based on the score, and it gets, in the end, a letter grading. So you can see the full list in this link, which you don't see, sorry. But I can send you the PDF afterwards, and you can click on it. But I think the most important part is actually not the result. It's more like the framework and what you can do with it. So we wanted to introduce a new notion, which is trusted volume. So instead of looking for bad behavior and bad exchanges, we wanted to look at which are the actual trustworthy exchanges, trustworthy data sources that you can account for. And the way you can use this framework is that, okay, you are an investor. First of all, you need to identify or calculate your risk appetite. Let's say you are a very low risk, so very risk averse investor that can only take AA rated exchanges into account. Then your market for trading is only around 3% of the total volume, of the total reported volume. If you are more risk-taking and willing to, risk more, then obviously your market is going to be bigger, but it also means that your market size is not guaranteed. Yeah. So to test the robustness of our framework, we actually plotted our ranking scores against volume, which we didn't include directly originally. And guess what? There's a correlation, which means that naturally you actually expect better exchanges to have more volumes. But what this chart also shows that they are actually on the middle top of the chart, center top. There are exchanges that usually top the volume rankings, but actually they are didn't score that well in overall in terms of business and funding and trustworthiness. Another interesting finding was that we separated the static, so due diligence part of the score and from the market quality score, so using trading data and order books. And the two scores also correlate, which means that potentially, if you just do proper due diligence on an exchange, that also infers the quality of the market. So very easy way to check if your exchange is good or not is just to look at very basic stuff like, has it been funded, who are the people even that founded the company, or are they even public? Very easy stuff. A few interesting results. So most of the best rated exchanges obviously have external funding, like a well-known VC, and the worst exchanges mainly have private. Interestingly, ICO funding was present across the board. Another interesting thing, as you would expect, the better exchanges were licensed more, and they were also registered as some sort of money services business. Score averages across locations. So the top locations are the US, Japan, South Korea, Hong Kong, the UK, basically where regulation is a lot more, a lot stronger. Exchanges tend to be a lot better quality as well. So we've seen a growth of bad quality exchanges in the last couple of years, and their volume took over the market share as well. And I think it's very important that we actually take a step back and see which data sources we can trust. And we hope that with the exchange benchmarking, we could actually create a tool for investors, data consumers, and traders that they can actually use for identifying the best trading venues. And as a data provider company, we think that data should serve transparency, which it doesn't do right now. And we hope that we can bring the trust back and data can serve transparency again. Thank you. I think there are
It's fine too. Yeah.
Oh.
Yeah, for me, so you were showing that anomaly in the exchange trading volumes. One of the examples of the exchange changing from this anomaly to the quite
yes, we can go back there.
Was it around the mining reward, and or could be possibly miners immediately selling after mining because they expected the prices to go down? Did you try to do this kind of analysis? Like, what could be the reason for that?
We actually didn't go that far, but we found quite a few exchanges having this sort of change, and it was very close to the publishing date of the Bitwise report that actually showed these anomalous trading behavior. So we guessed that some of the exchanges just changed their histograms basically because of the report coming out. But I can't really confirm. But we saw the change of quite a few exchanges around that time.
And if I can follow up quickly with another question, you mentioned 3% of the volume available on the AA exchanges.
Yeah.
If you actually try to apply some metrics of the percentage of the fake volume for the worst exchanges, then do you think that actually this 3% is much more? Like, did you try to estimate it? Like, it's not 3%, but it's actually like 20 or 30% of the real volume, and just 3% of the total volume, of which a lot is fake. Did you try to assign a metric of percentage of fake volume per exchange?
We actually did not want to go down that route. So we don't want to adjust values that are coming from a data source because it's a lot harder to justify. So we are feeding our data into indices and institutional clients, and for them the main, most important thing is methodology. So I think it's a lot harder to explain why I would find 3% to be fake and adjust with that. And I would rather just say, this exchange is good, I take it in 100%, this exchange is bad, I don't take it in at all. So we take this in or out approach. Yes?
Hi, you mentioned one of the metrics was API latency.
Yes.
Do you have any more data on that at all, or how you
Yes.
measured?
So, where should I go back to? Yes, so API latency, I think we found a website that checks the IP address of each of the APIs we were using. So we could check their location. And then I think that service also did a ping test for us, taking out the location bias. You can actually read in the methodology which service exactly we used.
Okay.
Yeah, but otherwise we also just queried each API ourselves and calculated the response time and also the rate limit. We had to test it as well.
Was that response time on trade, or was it response time on?
Not trade, it's just requesting order book data and requesting trade data. We did not actually execute anything. Yeah, but fair question.
Just out of curiosity, how did you, what methodology do you use to come up with the weighting of the various components in the aggregated scores?
Very fair question. We did an equal weighting. Yes, with the market quality with double weighting. So that's actually just, and trade surveillance was just a single score, so that had half of the weighting. It's not super elaborate, but it worked out well in terms of the results. Like this. So we were benchmarking it to the volume results. If you have better ideas, I'm happy to.
Just wondering whether it's
Yes.
as straightforward as like.
The Coin Telegraph top 10 has liquid in it. Is that, did you study liquid?
It's there, I think. Liquid is number 5.
Okay, so yes, so a quick comparison indicates you get more or less the same answers using different methodologies. So that gives
Cool.
us some confidence.
Thanks.
Oh, what is the spectrum looking like today, or like in the last week compared to 6 months ago? Do you see more tiny sums coming in, or do you see larger sums going? Is it more to the right hand side or left hand side? You see when you see the spectrum of the trade, the animation, sometimes the spectrum goes more to the right,
Yeah.
which means that it's higher volume as I see it.
Yeah.
How is it today compared as like in the last 3 months or last 6 months?
I'm not sure, but we can,
Because you're showing, I think, April data.
like
and when
this
you
one,
go
right?
up, It goes from the left to the side, like this one.
This one, right? I think here the weird part is that there's still, like, there's this shape, right? Which is what people usually expect, like more trades being placed at smaller amounts. So you would expect, even when people are like, want to trade more, they maybe just put in more trades. And there are less trades on the higher volume side. But then there's this hump there, which shows like someone is just putting random values around 15 bitcoins. Which, how do you even explain that? It could be wash trading. Someone's just like putting in random values. We don't know actually.
Yeah, and so my question is it a curve more like this today? Or
It depends which exchange really. Like,
yeah.
I can't really tell. But you can see that the patterns are really like varies a lot. Like the top, this one. Can I do this? This one we call Wolverine. Some people say this is a whale or a duck, I don't know. So there are really weird patterns. Yeah, sorry.
Did you try any other fiat-based currencies exchanges?
Other than KRW,
Yeah.
we will add a few more. We actually talked to one of the exchanges that ranked pretty low, and that's because they were offering more like emerging markets currencies. So South African currency, Malaysian currencies, and they were actually market leaders in that segment, but they ranked pretty low because we were looking at the major fiat and cryptocurrencies. So yeah, we will add more.
Would you recommend looking at other fiat-based exchanges with your current methodology?
Well,
With your framework?
to be honest, as an investor, you are pretty much tied to where you can get into the exchange, right? So it could be that you need a Korean bank account to open in a Korean exchange, so you might not be able to do that.
Yeah, you need to be a citizen.
If you're in India.
Cool. I think that's it. We can take it offline and you guys can talk to me after. Thank you.